Yes, sir.
Okay. You have read through the question and I saw your answer. I've not read through it completely because I was having in another calls and meetings. So I will go through your answer today and I will give you a feedback. I will send back the Word document to you. You can take a look at it. Okay. Uh,
Okay,
but
sir.
but a few things that I would like to discuss with respect to this is a very good question. Okay, the reason is because it is actually gives you a flavor of exactly what kind of questions can be asked in the examination. One thing that I would really recommend you to watch is or read through is or even in fact go through is the latest September mock which has been released. If you go through that also,
Okay.
you will get an idea that, okay, what kind of questions or what kind of flavor of questions can be asked in the latest semester or in the upcoming semester. I will also try to create a debrief regarding that, September semester mock, but I'm not going to do it now because I want the students to first attempt it. Then in the next week, I will come up with my explanations and my opinions.
Okay, no problem, sir. Sir, does ACCA really matches the level of questions that they provide in mock exams?
Yeah, they do. They do. So all the,
Because
yeah.
because in Indian ICI, what ICI does, if we are about to know that this particular topic is come in the mock test, then we are absolutely 101% sure that this particular topic will not come in exam.
No, it's not like that that you cannot see. ACCA is not that you can, leave a topic and go and write an exam. ACCA can ask a question from any part of the syllabus. And if you have seen the pattern of questions, like for example, that's why they have a section A question. In section A question, they kind of cover four parts of the syllabus. The syllabus area that they cover is kind of severely vast, right? So when it comes to ACCA, what happens is that the questions that they frame or they've asked from the pattern will be the similar, right? So you can expect a
Okay.
similar pattern of questions, but definitely when it comes to questions like I would put it in this way that you know what, specific topic related questions like theoretical questions that they can ask, that will can be can be from specific areas of syllabus which you cannot predict, right? So at least in 50 marker you know that a risk question will be asked, right? So that's something that you can be prepared about. Oh, the risk question can be asked, but they might not be asking business risk every time. They might be asking audit risk more, significant audit risk they might be asking. You can expect a question definitely from ethical standpoint. Ethics is something that they're going to ask. You can expect a question where there will be some from the party of the syllabus, like this question. Like you get asked to give an opinion on the significant, evidences that you have to collect, and also what is the conclusion that you're going to arrive. That kind of
It's
questions can also be
it's
asked.
an they can in that particular type of this particular type of question they can include any accounting standard or any
Yeah, they
standard
can
of
include
auditing.
any accounting standard. The common accounting standards, what they include is revenue, inventory, leasing, provisions. Provisions is getting a lot of prominence, right? Because it's all a judgmental area, right? See, as an auditor, the biggest challenge that you face is actually those areas which you feel you face judgment. Correct. When you want to
Yes, sir.
exercise professional judgment and professional skepticism, those are the areas which requires a lot of skill set, right? Let's say, for example, there is a provision of $1 million. How do you arrive? How do you come to a conclusion that $1 million is appropriate?
Yes,
That's the
sir.
question you have to think about, right? So that's the area that they are trying to test here. Like students' professional skepticism, students' professional judgment. What kind of questions are they asking to the auditor? Sorry, to the client as an auditor, which will help them to arrive at the conclusion. So if you have let's say in this example itself, they have written down the inventory, write down inventory have increased. Allowance of receivable have actually decreased, but the allowance collection period have increased. Right. So that's a skepticism that you are exercising, correct? If you look at this number, the number of days of collection period have increased, right? And but the percentage have decreased. Just by looking at this number, I can come to a conclusion that this seems not right. How can you
There's
say that
something
this is
fishy going
right?
on.
Yeah, there is some issue. Why your percentage of allowance is reduced? In fact, it has to be kept down, kept the same, or in fact, it has to be
Either
more,
lower or either
lower, or
uh,
it should be the same, or it
low
should be
should
more.
be the same.
It should be the same, or it should more. It should be more.
More.
Correct, because your receivable
Okay.
collection period has gone up. right? And allowance is about testing what assertion? Allowance is about testing the valuation, correct? What's the value of the receivable, right? What's the value of the receivable? Whether the value of the receivable is appropriate. What if we don't get that value? What if a person doesn't pay us back? Then it's a bad debt, correct? Just because you have taken confirmations doesn't mean that the valuation is also appropriate, correct?
Yes, sir.
Right? That's how you exercise professional judgment, right? Because you cannot definitely say, oh, you know what, 5% is nominal or 3% is nominal. You have to question the client to get into that conclusion. So that's
That
why,
why 3%, why
correct,
5%, why
exactly.
3% every time.
And that's why you have more professional marks in audit, because they want you to exercise these kind of questions. You need to mention that these questions are not being addressed in the scenario.
But sir, the problem is for us, is for like student like us, is that what answer we read is particularly not available in examiner solutions. So sometimes while we are self-studying, it is difficult for us to realize that what
Yeah.
we write or
See, there is no perfect answer. Like, even if you take an example of, for me, what I would have written, you cannot say that that's the perfect answer. I cannot score 100 out of 100, right? Firstly, you have to be in a mindset that, oh, you know what, it's very difficult to score 100 out of 100, because audit is a perspective. You understand? Your
it's
perspective and my perspective might be different. The way you approach audit, the way I approach audit might be different. But what is required is the rules. Am I following the rules of the audit? Correct. To come to a conclusion of an evidence, whether all the evidence have been appropriately corrected, something that you follow is assertions. Have you fulfilled your requirements for all the assertions? Like, have you got evidences for completeness? Have you got evidences for existence? Have you got evidences for valuation? Have you got evidences and done the professional judgment for presentation and disclosure? Have you got evidences for classification? Yes, then your balance should be appropriate. Do you understand? So, so that is what actually makes
yes, sir.
audit more relevant, right? So you cannot just take your answer and say that, oh, you know what, my answer is not the same as the answer that is given in the textbook, so I'm not going to get any marks. No, not necessarily. The way you might write might be different. Your language that you might use might be different. But are you talking in the same lines that as of the examiner? That's what is required. Like, are you asking the right questions? To give you an example, the question that I posted right now or asked right now is a relevant question. Correct. So if you
Yes,
have
sir.
to show the courageousness, like I tell to all the students that you should show the courageousness. Like, you should have that courage to tell to the examiner that this doesn't seem right. That's the courage they are looking for from a student. That's the answer they are looking for from a student. You
Yes, sir.
understand?
Yes, sir.
Yeah. So I will give you my opinions and my feedback, and as you rightly said, I cannot go and sit and write the entire answer because it doesn't make any sense. I would put it in this way that I will explain to you the pointers for each of the requirement. We have a couple of requirements. One is for 12 marks and one is for 8
8
marks. One
marks.
is in Arjun Limited is to evaluate the results of subsequent events and final analytical procedures, and commencing on any inconsistencies in relation to the audit evidence gathered.
Audited together.
So basically, firstly, when they say about evaluate the results of subsequent events, the first question that should come to our mind is, what is subsequent event? So a subsequent event is an event that occurred in the following year, but that event actually can either cause an adjustment or a non-adjusting event. The event, if it wants to be an adjusting event, it should have created the event should have originated prior to the year end. To give an example, trade receivable. As at year end, we have a trade receivable, which means we have sold a good to the customer. And after the year end, the customer does not have money to pay back. So the original event where the sale happened before the year end, right? But the
Before
customer
the
did
in the
not,
financial year.
yeah, in the financial year. But the customer went bankrupt only after the year end, correct?
Yes, sir.
Right? So that happened after the year end. So definitely that area is something that is something that is called as subsequent event, where the origination of the event happened before the year end, but the event itself occurred on the next year or post the year end. That is called a subsequent event. So if the original event happened before the year end, then there is a adjusting event. If it happened after the year end, then it's a non-adjusting event. An example of a non-adjusting event is where, company sold a subsidiary, company acquired a subsidiary. Before that, the subsidiary was not there, or the subsidiary was there, and the event itself originated after the year end. They sold the subsidiary after the year end. Correct. So as at year end, it's still a subsidiary. Correct?
Yes, sir.
Okay. Something happened to my what do you call it? Textbook. Yeah. So here the question is like they did a subsequent event and we need to evaluate the procedures, and also they have done a final analytical procedures. Analytical procedures are done in 3 stages. During the stage of audit risk, where it is called as uh, uh,
Pre
sorry,
pre-analytical process or something.
pre-analytical procedures, and during the substantive procedures you do an analytical review, because substantive procedures you have 2 steps. One is analytical review, and then test of details. So test of details is you go into details and collect the evidences directly, is test of details. First you check the analytical, do the comparison and see whether there is a movement. If the movement can be explained with analytical reviews, if the controls are really good, then analytical reviews are fine, you don't need to go to test of details. But if the controls are not good, or the controls are not sufficient, or if it is a high risk account, or it's a significant risk account, then you cannot have just analytical review. You should do test of details. Then you have something that's called as
And sir,
yeah,
test of details particularly means substantive procedures only, no?
correct. So test of details means collecting the evidences. Collecting the evidences means substantive procedures and things like that.
Okay.
Okay.
Yes, sir.
Yeah. So here in this situation, they have done a final analytical procedures. Even during the final analytical procedure, even before you complete the audit, after you collect all the substantive evidences, substantive evidences, you do a final audit review. In this final audit review, you do an analytical procedure, mainly done by, managers and partners, etc. Where what they do is they do a comparison and see whether the evidences that they have collected is enough to corroborate the movement. Right. To give you an example, inventory value has declined significantly. Whether the explanation is sufficient and the evidences they have collected is sufficient is what we are going to look at. Yeah.
Yes, sir.
Yeah. So commenting on any inconsistencies in relation to the audit evidences. So what they are asking you to comment is on these 2 aspects. On these areas is what you are required to comment, like whether enough audit evidences have been collected and whether those evidences are enough to substantiate the movement, right? So if let's first talk about there are 2 areas or 2 accounts that they are primarily talking about. One is inventory and second is receivables, correct?
Receivable collection.
They have given us 3 ratios for inventory. One is inventory value. Inventory value, if you look at here, it has fallen by 84%. Now, the beauty of this question is that this is so practical. This is exactly how in real audit works. They first take the ratio, they look at the value, they show the value, they look at the ratio, and they give the auditor's expectation. The comment also given, what the client has mentioned, that also they mention, and what are the evidences that have been collected. Everything is mentioned. So that's why I picked up one of this question, is because it's really relating to our practical aspect as well. So if you see in your, when you go after completing ACC, if you go see a job, when you're doing a job, if you see this kind of things, you're already aware of, oh, you know what, I've studied these kind of things in my ACC exams. So this is very relevant to the real world as well. So if you look at here, inventory has fallen by 84% in the year. This is in line with the expectations as in November 2004. Management moved to a just-in-inventory system. Correct. So when they move to a just-in-inventory system, it is expected that the inventory closing value will reduce. Why? Because what is just-in-inventory system? They kind of buy the inventory or hold the inventory only when whatever is required. Whatever is not required, they do not hold it. They kind of, don't order for it at all. So the significant fall in inventory level is consistent with a reduction in the holding period. So you can definitely mention that, from in the scenario, in your answer as well. You can say that the move to a just-in-inventory system is consistent with the fall in inventory levels as well as inventory holding period. When the inventory levels have fallen, but the inventory holding period have not fallen, then there is an inconsistency. But here these two are matching. This and this is matching. So we can,
Matching.
yeah, so we can come to a conclusion that, okay, this is moving in line. Auditors' attendance at the year-end inventory count, sample counts were performed, count controls observed, no inaccuracies were identified, no further work over the completeness, accuracy, and existence of the inventory is required. Now, that's where the problem, is arising. Okay, they have moved to a just-in-inventory system. This is a major change. If you look at here, the movement is close to 21 million. Correct? Now, when it's
Yes, sir.
21 million, what is the materiality? Right? If you look at here, draft shows a revenue of 120 million, profit before tax of 11 million, and
11
total
million.
assets is 56 million. So the movement of 21 million from 25 million to 4 million is definitely a kind of a material movement, correct?
Yes, sir.
Yeah, and it's reducing. And when inventory value reduces, what happens? When inventory value reduces, your cost will increase and your profit will go down.
Yes, sir.
Right? Your profit will go down because your cost is significantly increasing because your closing inventory is significantly reducing. Correct?
Yes. But sir, one question.
Sure.
So normally no company in their financial statements doesn't want to disclose less profits. So if so this is even be considered an audit risk or not?
No, this is see, you cannot consider this as a primary audit risk, but what I'm trying to say is the movement is material, correct?
Yes, sir.
Right? And you don't know the intentions of the company, and unless and until you kind of complete the procedures, right? uh, you're true that when you say that the company does not might not have the intention to reduce their profit. What if they deliberately want to reduce their profit? So to give you an example, they move to the just in inventory system to actually write down all of their or all of their unsold inventories, to just write it down and to say that, oh, you know what, my gross profit have reduced. You understand? So we
Yes,
don't
sir.
know the intention because we don't know the full details is given, correct? But what I'm trying
Yes,
to
sir.
say is there is a material movement, correct? There has been, when you look at the numbers, there has been a material movement, correct? Now, just
Yes, sir.
because you have done an inventory count and there was no inaccuracies found, you cannot say that you are not going to do work on completeness, accuracy, and existence of the inventory. What if the 4 million itself is wrong? How do you come to a
Might be
conclusion
possible.
that, okay, 4 million is accurate? How do you come to conclusion that 4 million is existing? What if it's 3.5 million? You
Yes, sir.
understand? What if there are, gaps in completeness where there are missing items, but it's shown in the value over here? It's not complete, correct? What if
Yes,
there
sir.
were, more amount of goods and you didn't show it here? So we need to, perform procedures and uh, you know, it is insufficient. So you need to write that it is insufficient that evidences just because of the controls were tested, just because of that, you cannot conclude on the existence and accuracy of the inventories. And what is, are they testing any invoices? Have you tested for the opening inventory or purchases to the, invoices? You have not, right? Because you have not completed anything in accuracy. All these testing of invoices comes in accuracy, correct?
Yes, sir. I've missed many points.
Yeah. No, I'm just trying to give you that idea, correct? How you can come to that conclusion, correct? So,
Yes, sir.
see, something that they are not doing, right? Always when they say that no further work is provided is actually a red flag for us. Okay, they have done the inventory count, but still all the assertions have to be completed. Only an balance will be true. See, balance can be true and fair only if all the assertions are fulfilled. Just I will give you an example. Think of your face. Go to the mirror. Think of your face. Just imagine if you don't have eyes. I mean, not you're not blind. I'm just saying that the entire portion of eyes is blank. Like there is nothing on that. Is your face? Can you say your face is complete?
No, sir.
What if you don't have any eyebrows? Can you say your face is complete? Will you be able
No,
to
sir.
recognize? In fact, it's a criminal crime to have shaven your eyebrows. Do you know that? You cannot shave your eyebrows because it's very difficult to identify once you shave your eyebrows until and unless you have some defects. right? So it's very important that, okay, in our face all these features are there, right? Only then we can say our face is complete. Only then we can have a detection that, oh, no, this is this person. Correct. We won't be able to detect that person, or we won't be able to recognize someone if his facial features have changed. Correct. Similarly, if you want to have a substantiative, evidence on the inventory value, definitely we need to have all the assertions fulfilled. Assertions are like features on your face. Correct. If
Yes,
you
sir.
want a balance to be confirmed, then definitely those assertions should be fulfilled, like completeness, accuracy, existence should be fulfilled. Only then the assertions will, it will have a, we will have a say on the assertions. Is it clear?
Yes, sir.
Yeah. So just because saying, oh, you have done an inventory count, valuation of the inventory could have been met, and some part of existence could also be completed, but doesn't mean that it gives us control, or it gives us evidences for all the assertions. Inventory count does not give assertions for, does not give evidences for all the assertions. Still, you have to compare the inventories against the uh, purchase invoices. You should have further evidences in relation to the just-in-time value. You should, because it's a major change. They have moved their inventory system from an old system to a new system. So the entire inventory balances have to be maintained, have to be properly checked. And also
Yes, sir.
additional procedures have to be checked to check whether the inventory amount is accurate, and whether the system is not having any control issues. How can they say that their system is not having control issues? Have you tested the just-in-time system, etc.? Right. If you look at here, the inventory holding period is 15 days to 49 days. Movement to just-in-time will reduce, so that's correct. So even the inventory holding period have actually reduced, so it is corroborative, and the sample customer contract terms were reviewed and confirmed that the state orders are expected to be manufactured within 5 working days, with fulfillment orders of 10 working days. This is consistent with the company's advertised terms, and therefore suppose the reduction in the inventory holding period.
Holding period.
Mm, 1 second. Okay. Yeah, I don't have much to say about this because it's just a holding period that they have calculated. Anyway, and it is lined with the just-in-time inventory system, and we have already explained about this sentence. Right, I was just looking at the answer if there was any further sentence that I missed, but I covered all. The second one is, the third one is about inventory write down. Now here there is a slight problem.
Con
The
it is a quite controversial point.
Correct. Because it has actually increased, correct? So technically,
Technically
why?
should reduce or come close to zero.
Absolutely. Absolutely. Why? Because just-in-time inventory system is technically a system where you reduce your obsolete inventories. Now you have moved to a system and you have reduced your inventory value by 21 million, and still you're having a percentage of write down of 10%. That's a bit of a question that you want to understand, right? So the move to
Like
a just-in,
it's not about 10%, it's like greater than what percentage which
previously they had.
was during in the previous inventory system.
Absolutely. So one of the reason they are saying that the total write down of obsolete inventory is 4 million in 2005, which is lower than the amount of 1.25 million. So what they are trying to say is like, the write down is 4.4 million over 4 million. So that is 10%, correct? Last time it was 1.25 million over 25 million. But still, why the 4 million? 0.4 million, I'm sorry. Why the 0.4 million? Even though the absolute amount has reduced, the reason why you have a just-in-time inventory system is to avoid such losses, correct? So even 0.4 million seems to be very high, right? Even the 0.4 million seems to be a bit higher, right? So we need to have further discussions with the management. We need to have further discussions with the production staff on how this percentage was arrived, right? How this percentage was arrived. Just because this is less than 5% of the profit before tax, and therefore it is immaterial, so no further work is performed, you cannot accept that particular fact. Right. How do you know that, okay, this percentage is this particular number is appropriate? What if it's more than that? What if they're actually having more than this, right? And they don't want to show it. You understand?
Yes,
Correct?
sir.
So the manipulation, so the intention of the management should also be questioned here. Like, are they, are they trying to, are we suspecting something on the management's manipulation? Are they trying to manipulate the profits of the company? Right. We need to understand that part as well. Right. It may be the case that the amount relates to specific items. Like it could be some specific items that could have written down. For example, some goods were ordered and they got cancelled, or they would have taken some general percentage at the year end and they would have shown this. But what basis they have come to this adjustment? What is the what is the what is the way they have reached this 0.4 million is something that we need to question. Okay, so something that we need to question, because we cannot arrive at a conclusion just because it's lower than 5% of profit, and it doesn't work like this way. So even if it is less than material, 0.4 million, right? What is my profit before tax is 11 million, correct?
सर वी
Profit
कैन
before
यूज, सर इवन इसमें ऐसा भी हम कह सकते हैं कि लाइक मैनेजमेंट इज यूजिंग ऑडिटर्स मटेरियलिटी कॉन्सेप्ट टू डिफाई or to hide their mistakes.
not
Like somehow,
necessarily, not
like somehow
necessarily.
management know that what performance materiality levels have auditors set, and they can use that particular level to like do fraud and miss and do
Uh,
not report that.
Not necessarily, because see, even though management will also have an expertise, right? And all the materiality levels are actually given to the client up when the audit is completed. Like if it is there in your audit report, so there's nothing to hide. Also, there will be discussions on how the audit materiality will be assessed and how it will be fixed. Even during the planning meeting, also it is discussed with the client. So you cannot go and say, oh, you know what, this is an internal area, and this is how we have arrived. If the management is saying that, okay, you know what, it could be that the management is saying, oh, you know what, it is less than 5%, so that's the reason. But it's not the management who are saying it. Management advice is over here. It's the auditor's evidence that they have collected is what is mentioned over here. You understand? Management is
Yes,
not
sir.
saying that it's less than 5% profit. It's the auditor who is saying that it's less than 5% profit. But the 5% profit is 0.5 million, right? And if you look at the amount is 0.4 million, you know
Sir,
that, there is performance materiality level and tolerable error, etc., right? So if you look at tolerable error, it would be like, 10% or even less than that, correct? So of the overall materiality, the 0.5 million is the overall materiality. 500,000 is overall materiality. So this could be, tolerable error could be 75% of the overall materiality, which is what? 375,000.
3.7,
Correct. So
0.3,
in
nearly
that case,
0.3 million.
correct,
It
3.3
is
million.
material.
So it is material, and 1% could be the difference level, right? So 1% could be the performance materiality could be 75%, and 1% of overall materiality, which is 55,000, could be the tolerable error limit, correct? So definitely it could
Yes,
be
sir.
material in that aspect, correct?
Yes, sir.
Yeah. So that's what we need to understand. So, and further, 0.4 million is only for one account. What if there are other accounts we have misstatements? And in addition, in summation of all the misstatement, it could be more than that, right? You
But sir,
understand?
in an exam, we are like allowed to write that in and
Yeah.
assume that factored in many accounts that there can be
Yeah, there
material
can be
misstatements,
misstatements in other areas as well, which could result in a, material misstatement in a, what do you call it, in an aggregate level.
aggregate level.
Yeah,
Okay. I think I
correct.
read that bit.
Yeah, a
Yes, sir.
misstatement. So there could be, so they have mentioned it that a misstatement in this allowance could be material in conjunction with other misstatements.
Other misstatements.
So at present, there is no evidence as to whether this value is overstated or understated. So we don't know anything about this, right? So we have to test it. And it's 75% above the overall performance materiality. So we have to test it. So the
Yes,
overall
sir.
materialities for the entire financial statements, right? Like inventory, assets, everything is together is overall materiality. Performance materiality is individually set for each of the account. So each of the account, the material misstatement should not be more than 75% of the overall materiality. So in that case, this 0.4 million is above the performance materiality, right? So you can write that as well. you can say that 0.4
Yes.
million is actually more than the performance materiality, which is 75% or 50% of the overall materiality. Hence, this account have to be tested. You cannot say that no further material can be performed because they are immaterial. No.
And sir, I have to consider all the time 75% the performance
75% or
materiality.
50% is also fine. You can consider 50% also to be more prudent.
Okay. Sir, like in the case when particularly I know that audit opinion might be qualified.
Yeah,
So in that case, I can go up to like 70%, 80%, and if the opinion can be pervasive or modified, then I can reduce it to like 40, 50%.
correct.
Can I do that?
You can do that. If it is pervasive, see, if it is pervasive, then definitely it is, definitely it is going to be, you don't need to reduce the materiality. If firstly, if there is material misstatement that exists, correct, you're going to qualify the opinion. And if the misstatement is pervasive enough, you're going to give an adverse opinion, you're going to give an adverse opinion, right? So when do you reduce your materiality? When you reduce the materiality is when you see risk, when the risk is more, or you see a control gap. For example, you see manual entries being posted, then you reduce the materiality.
Okay.
You understand? So you reduce your materiality between 50% to 75% of the overall materiality, performance materiality is kept. You reduce it further down to 50% when you see control gaps.
Okay, sir.
Right. Okay. So you further reduce it to 25% or you further reduce it to 30% when you see control gaps, like you see manual entries being posted, or you see there was a fraud that was detected in the last year, or there was there were other issues that were noted, etc. Okay.
Yes, sir.
Receivable collection period for 53 days and 49 days. No changes in credit period have been enacted in the year. Hence, the collection period is expected to remain in line with prior years. The increase in receivable collection period relates to slow payment of invoices by CAMI Limited, a major customer. The financial controller is confident that the payment will be made.
Okay.
Outstanding
So,
invoices agreed to trade
mm,
receivable ledger and a simple customer confirmation of the balances obtained.
obtain.
Yeah. So if you look at here, the receivable collection period have actually compared to the prior year, it has, it has remained the same, but also it appears to suggest that the trade may be overstated due to understatement of the irrecoverable trade receivables, right? So if you look at here, you have reduced the allowances. So when you reduce your allowances, the value of the receivable could be more, correct? When your value of
Yes, sir.
receivable is more, definitely your receivable collection period will also go above, correct?
Yes,
Um,
sir.
but the question here is, you are talking about when you get confirmations, you are talking about the recoverability of the receivables, correct? You're talking about the recoverability of the receivables. Um, it is an evidence as a recoverability. And here the question is the valuation, right? What is the value of receivables? It's not going to give evidences in relation to the valuation. It shows evidences in relation to existence. So to give you an example, let's say you have to give me 100 rupees, right, Prakhar?
Yes,
And
sir.
my auditor reaches out to you and sends you a notice that, okay, are you supposed to give 100 rupees to Prashant? What will you say? You will say yes, correct?
Yes.
Now you have no intentions to pay. Still you will say yes, right? Still you could say
Because
yes.
because I owe you that one.
Yeah, you owe me that much. That's a true statement, correct?
Yes, sir.
So whether Prakhar exists, whether the balance exists, that's what the confirmation is showing. Confirmation cannot give you valuation perspective, correct? It's
Yes,
only
sir.
covers existence, isn't it?
Yes, sir.
But
I've read that point.
yes,
I think I got it.
yeah,
Yes, sir.
yeah, but allowance is where you are trying to achieve the valuation, whether the value of the receivable is true. So here the valuation is under question. That's where the problem lies, isn't it? Because you have reduced the allowance. So just because a receivable exists, or just because an receivable exists, and you have a recoverability, it doesn't give you evidences. The confirmation doesn't give you enough evidences on the recoverability of that particular balance. For that, you have to look at the aging analysis. Correct? You need to have a look at the aging analysis. So, and also post year end, as per IAS 10, subsequent events, you have to do further procedures, like what you can do. You can check the trade receivable statements, whether you have paid me money or not. See, let's say as of 31st December, you have to pay me 100 rupees. On 10th January, you have paid me 100 rupees. 10th January 2025, you have paid me 100 rupees. So which means the balance is true, right? The balance valuation is also correct. Existence is also correct, right? Why will you pay me without owing me? You will definitely pay me only if you owe me, correct?
Yes, sir.
And value also is correct. You paid me 100 rupees. So the value is also fulfilled, right? Yes or no?
Yes, sir. Yes, sir.
So you need to do certain subsequent analysis, subsequent event analysis, where you need to get an outstanding report and do an aging analysis. Like how many months it is old, how many years it is old. Is it older than more than 10 days or more than 30 days, more than 90 days, etc. And post year end, you need to collect the recoverability. Like you need to obtain the statements after the year end to see whether people are actually paying you back the money they owe. Yes or no? Only then you
Yes,
can
sir.
prove the valuation of the inventories, right? Um, Further, you says that the total fall is 5 million, which is below 5% of profit is not correct. Because again, performance materiality comes into picture, correct? 0.5 million is actually greater than the material performance materiality of 75% of the profit before tax, correct?
Yes,
Further,
sir.
it is inappropriate that you don't need to do further evidence. You don't need to collect further evidences is not correct because 5% or 3% is a judgment area. And when it comes to judgment area, how did the company arrive at a judgment? How did the company arrive at the 3% number? Do we have enough evidences on the 3% number? Have they given us, that the evidence is only 3% because post we have got this much percentage, we have got collected this much money. Have we got so much of evidences? No. So you need to be, a more bold, Prakar. You need to be more bold to say that, oh, you know what, no further work was performed, which means you should say that it is not correct. You cannot say that no further work is performed. It's not appropriate. You understand,
Yes, sir.
right? See, are you getting the differences, what you have written and what I am trying to explain?
Yes, sir. I missed many points.
No, no, that's okay. When you miss, right, you'll get a more clarity because the next time when you do a question, you will be feeling more relieved that, oh, you know what, these are the things that I discussed with sir, and these are the things that I can think about. Generally, when it comes to looking at the answer, you may not remember, but when someone says that this is the mistake you did, you will remember it for a lifetime.
Yes, sir.
So that's fine. So that's about the part A. If you look at the part 2, you are preparing for a discussion with the management of Barney Limited about the misstatements identified in the financial statements during the audit. The audit working papers contain the following schedule of uncorrected misstatements prepared by the audit team. Barney's Limited, prior to any adjustments of the below items, show profit before tax of 43 million, and it was 45 million the last year, and total assets were 105 and 120. Government grants, debit 5 million, statement of profit or loss, credit nil, 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 and statement of financial position shows a credit of 5 million. Machine sale 1 million and nil 1 million. Total is 6 million, and statement of financial position, it shows a liability of 6 million. Government grant, Barney received a government grant on 31st December to invest in new machinery. A condition of the grant requires the funds to be invested within 12 months of the grant date or it becomes repayable. The grant has been recognized in full in statement of profit or loss. However, the machine has not been purchased yet. The finance director of Bombay Limited assured the audit team that the money will be invested by 30th September X5. So what is the problem here? You are
Sir,
preparing, yeah,
sir, I,
go ahead.
sir, I've seen this particular question from my Kaplan exam kit,
Hmm.
and in Kaplan they've missed that government grant point.
Okay.
So I'm not even done in my answer.
Oh, that's okay. That's okay.
So
That's okay.
sir, I was sorry, but I was not looking at your screenshot. I just saw the question name and I found it on Kaplan. So
That's okay. That's okay. That's okay. But this government grant is a very good question. I'll tell you why. Because uh, there are two issues that they are highlighting here, right? One issue is that one issue I will put it in this way is that they received a government grant on 31st December. Our year end is
yes, sir.
31st March, correct?
Yes, sir.
Now, firstly, itself, what they have done, they have, without purchasing the machinery, they have actually recognized the government grant in full in the profit or loss. Now, that itself is a wrong accounting treatment. Why it is a wrong
Yes, sir.
accounting treatment? As
So
per
they should
IAS 20, correct. As per
either
IAS
they should
20,
create a deferred liability, I think.
correct. They should either create a deferred liability of the total government grant 5 million they have received, and it should be charged to the income relating to the useful life of the machinery that you intend to purchase. Correct. That's the number one rule that you have to
And
do.
even if, and sir, even the second point, they can done only after they purchase that particular machine.
Correct. Second is that they have to reduce the cost of the machinery. Correct. These are the
Yes,
two
sir.
things that they have to do. So the entire amount cannot be shown in deferred life. It cannot be, in fact, cannot be shown in P&L because your P&L is now actually more than 5 million. So when you remove this 5 million, your profit before tax actually will further reduce by 5 million, which will go down to 39 million. Correct. Or in fact, 38 million. Correct.
Yes, sir.
And now that is significantly lower compared to the last year. So one thing that I am is like management, are they trying to manipulate deliberately? That question also will come to your mind.
Yes, sir.
You understand? So first, when you see this, first you give the wrong thing that they have done. What is the incorrect accounting treatment they have done? They have taken everything into P&L, which is incorrect. As per the government grant IAS 20, the grant has to be released to the profit or loss in line with the use of the asset,
Use of the asset.
or reduced from the cost of the asset and depreciated over the useful life. And the recognition of the grant to profit or loss in full is incorrect. As the asset has not been purchased, the grant amount of 5 million pound have been recognized, should have been recognized at deferred income at the reporting date, isn't it? See, since you have
Yes,
not
sir.
purchased the asset, you cannot reduce it from the cost of the asset. You have not purchased the asset, so you don't know what is the cost, correct? So the entire
Yes,
5
sir.
million should have been recognized as a deferred liability,
Deferred
correct?
liability.
And as a
Yes, sir.
result, what is happening? Your profit or loss is overstated, right? Your liability is understated, correct?
And overstated by a material amount.
Yeah, profit is overstated by a material amount,
Material
right?
amount.
And what is the percentage of materiality? If you look at here, 43 million into 5%. If you take 43 million into, I'm
Around 2
sorry,
million.
yeah, around 2 million. So 43 million divided by, sorry, into
5%.
0.05 is 2 million, correct?
2
So it
million.
is way over materiality. 5 million is way over materiality, right? So 5 million divided by 43 is around 11%, correct? So it
Yes, sir.
represents 11% of the profit before tax. So it is way over the materiality. So it is a material, it's a factual material misstatement. And management have to, auditor have should ask the management to amend the financial statement, correct? Now,
Yes, sir.
what if the management does not amend? What will happen? It will be a qualified opinion,
Qualified opinion.
right? Why it is
Yes,
not a
sir.
pervasive opinion? Because it is confined to two parts of the financial position, financial statement. One, a liability. Second, profit or loss. Understood?
Sure.
Profit before tax. Only those two accounts are going to be affected, isn't it? So
Yes,
hence,
sir.
it is not a pervasive. It's not a pervasive. But you can also check whether does it represent, it does not represent a substantial portion. So it could not be considered as a pervasive. But you can also check the management's intention. If you say this opinion, if you tell them to rectify the statement, if management is not, if management is not willing, or if they're not, interested, their intention could also be, tested. Why? Because they want to show their profits as higher. Could be one of the intention, correct?
Yes, sir.
Now, when you qualify, what you should do? A basis of qualified opinion should be shown, right? And describe the matter, giving the qualification along with the quantification of their financial effect. Understood?
Yes, sir.
Simple, right? It's a very simple question. It's nothing complicated because you have proper problem in front of you and you know what the reason or the issue is. If you know how to recognize a government grant, you will be able to understand that the what they have done is incorrect and this is not they have to do. Now look at the next one, machine sale. 31st March, Bombay sold a machine which was no longer in use. Under the terms of sale agreement, the total sale price of the machine is 10 million, which would be paid on 31st March X6. The company has recognized the full sale of 10 million when calculating the profit on disposal for the asset and for the value of the receivable in the current year financial statement. The audit team has calculated the present value of the receivable at the reporting date is 9 million. Therefore, a profit on disposal and the receivable are overstated at the reporting date by 1 million. Okay.
Yes, sir.
Net present value. This is based on company's cost of capital 10%, which has been calculated by the client. Sufficient and appropriate evidence have been obtained in relation to the calculation. Conclude that 10% is appropriate cost of capital. So you don't need to mention anything about that, isn't it?
Sir, in my Kaplan, like Kaplan exam kit, this
Yeah.
particularly point machine sale is uh, very much like clarified, and in that I think the cost of capital point is also not confirmed by the auditor.
Okay.
So I write the answer in that way.
That's okay. That's okay. If so, you can also mention that whether the cost of capital, how did they arrive at 10%, can also be, should also be verified or justified. So what is the problem here then? Let's discuss it. See, as per IFRS 9, when requires a receivable arising on a sale to be recognized as a liability at the fair value, right? Initially at the fair value, recognized initially at the fair value, and held on an amortized cost basis, correct? That's what
Yes,
they
sir.
need to recognize. Now, the fair value of the receivable, in this case, amount due in 1 year, and it has to be discounted back to the reporting date.
Present year
Correct.
is 9 million.
Correct. So the value that they have to recognize should be as at 9 million. Correct. But at what value they have recognized? They have recognized it at
10 million.
10 million. So that is inappropriate because the payment would be 1 year later. So the discounted value should be shown. Right. So and the 1 million difference, right? The 1 million difference is an overstatement of what? 1% of your
Profits,
assets. 1 million is around 1% of your assets, right? Because your asset value is 105 million. Correct.
which is
Right?
a material amount.
Yeah, and then it is 2.3% of your profit before tax, right? But so it is not material in isolation. It's not a material amount in isolation because it's only 2.3%, correct? But it's close to be material, right? You understand,
Yes, sir.
right? So if it is not material on its own, the adjustment will reduce the risk of cumulative uncorrected misstatements in future, correct? So even though it is
Yes, sir.
not material when it comes to the overall financial statement on its own, like if they don't correct this alone, then it's not going to be material, isn't it? If others have been corrected, for example, they do not correct 5 million and they do not correct this, then both of them are a material amount, correct? But they corrected 5
Yes,
million
sir.
and there are no other issues at all. There are no other issues. Just imagine there are no other issues. So this amount alone cannot be material. Why? Because it only represents 2.3%. Correct, right? It represents only
Yes, sir.
2.3%. But it is definitely above our performance materiality and it's definitely above our tolerable error. Correct? So we need to suggest it. So you can say that it is above the tolerable error and it is above the performance materiality. So we would still recommend the client to adjust this financial statement. However, if there are no other misstatements, this will not create an impact on the auditor's opinion.
Impact of auditor's opinion.
Correct? You understood? Because this alone will not create an impact on the auditor's opinion. Because why? Because alone on this 1 million is not material amount. Understood?
Yes, sir.
Right? Any questions?
No, sir.
Yeah. So we'll take a break and we'll take a 10 minutes break. Okay. And then we'll do one question. Another question. I don't know if you have done this question. Have you done this question? Kelly Company.
Let me check, sir. Just 1 minute.
Yeah.
No, sir.
Okay. So then we'll do that question. Okay.
Okay, sir.
Yeah. Kelly Company seems to be a good question. All right. Okay. Thank you, Prakar. We'll meet in 10 minutes. Huh?
Okay, sir.
Yeah, thank you. Have you joined?
Yes, sir.
Oh, okay, you're there. So let's quickly go through this particular
Sir,
question.
sir.
Yeah,
Sir, can you start that new question? Can you just check my answer and show me that how much marks I can get it?
sure.
I write this particular answer in exam.
Yeah, sure. 1 second. So I will show you how I kind of evaluate the answer. Okay. So firstly, we have to go through the requirements, right? And see, if you look at your solution, you are given like what exactly are the marking allocation scheme. So if you look at here, there are total 12 marks for the first pointer, and inventory holding and inventory value and inventory allowance and receivable allowance. These are the pointers that they are actually trying to cover. So which means if you're writing about all of these aspects, at least 3 marks are given. Generally up to 1 mark for each valued comment on the evaluation, correct? 1 mark
Yes,
for
sir.
each point. So when I look at your answer, I have, where did it go? Yeah, answer to solve and co. Okay, right. So if you look at here, results, subsequent procedures according to IAS 20, subsequent overall review of the financial statement. This is fine. So you will get 1 mark for this directly. Uh, Let me just check. Left to 1 mark. Yeah. Yeah. What are analytical procedures? You have explained about analytical procedures, so that you can get up to 1 mark. So I'll tell you how I mark. So I select this and I read this and it seems to be correct. Then I would put immediately comment saying that you'll get 1 mark. Okay. Now, inventory. Just-in-time inventory system is ordered when it is required or when raw material is ordered. Okay. Okay. It would be expected that the auditor would perform procedures such as detailed analysis of the year-end report, whether accuracy of the cost inventory is tested, reference to the purchase invoices. Very good. These are all good valid points. Further cost calculations such as recalculation of the overhead absorption rate. Correct. The increase in the rate of obsolete inventory is questionable and is unexpected. True. As in the just-in systems, obsolete rate is not possible theoretically, as orders are specifically placed according to the manufacturing demands is less than change in order. The auditor should review the slow-moving items and further procedures according to IAS 2 inventory and ensure that the slow-moving items, if written down value is correct. The auditor should also further discussions with the management to confirm that this drastic change in the inventory levels is due to the GAT or due to any other items to be written off or specific order. So definitely, I can give you pointers for this. I can give you one and a half pointers for this. Okay, 1.5 marks because these are valued pointers. You are talking about year-end. You are talking about accuracy. You are talking about valuation. You are also talking about the completeness when you look at the year-end inventory report. Correct. So I'll put
Yes,
it.
sir.
I'll put it this way. I'll give you 2 marks. Okay. The increase in rate of obsolete inventory is questionable and unexpected. It is not possible theoretically. It is not possible, but you have to, write from the perspective that why the management actually have increased it, correct? And also you've not written about, uh, if you look at here, you have not written anything about this aspect, correct? That they have not further tested anything, correct? So because since
Yes,
you have
sir.
not written about that, I can give you only half a mark for this point. You understand? If you had
Yes,
written,
sir.
oh, you know what? They are not further performed any procedures, I would have given you full marks. You understand? The author should
Yes,
also
sir.
review slow moving further procedures, which is fine, which doesn't have any relevance to this particular topic. You understand? Because
Yes.
technically they have reduced their inventory value, right? So slow moving is not going to be there. Correct. So how can you say there will be slow moving when they have actually reduced their items?
But sir, the obsolete percentage is still more
Yeah,
than.
correct. So you have to be specific about this comment. You understand? The comment that the auditor has
Okay.
made, you have to be specific about that one. Like why 0.4 million? How did they arrive at 0.4 million? On what basis the 0.4 million is justifiable? Correct. And you have to be writing about this part. You understand? So just because you're saying slow moving, I cannot give you a mark on that. Right. You have to be more specific in relation to the 0.4 million. How did they arrive at 0.4 million? Correct. And why there are no other procedures for 0.4 million? See, majority of the students, right? I will tell you, majority of the students, more than 90% of the students, the reason why they fail is because they take certain sentences in your scenarios lightly. To give an example, these are all very important scenarios in your question that have to be taken very seriously. Correct. Because nothing, you have to have that mindset that nothing given in the scenario is should not take anything into the face value. You should think that, oh, you know what, this has something to do with the scenario. Correct. And
Yes,
should
sir.
something right. Right.
Yes, sir.
Yeah. Okay. Um, okay. So, okay, now that's the case here. So I'm not going to give you any marks for this. The auditor should also do further discussions with the management to confirm if the drastic change in inventory levels is due to just-in-time inventory system or due to any other items which are written down specific to that cancel. Okay, I can give you half a mark for this as well. Again, there is no relevance to the scenario. You're writing only general pointers, correct? It's not relevant to the scenario. Like you've not taken pointer from this particular aspect and mentioned it, or you know what, how they are coming at this conclusion. Correct. Is it due to any specific item? Is it due to any item which is not given, not clarity, not very clearly mentioned? Are they? What is the
Yes, sir.
intention of the
Yeah.
management to do this? You understand? So I can give you total of around 2.5, 0.5, 3 marks for this, right? And 1 mark for this. So total has just been 4 marks. And the trade receivable in collection with the forward is a credit policy and also as an undertaking of debtor. Okay. The increase in trade is due to the inherent credit policy of the company and also due to an understatement of the debtors. Correct. This is correct. This is a valid 1 marker point. Okay, 1 mark. Also, the result of the subsequent events contradict the statement of financial control that came with clear all the dues. Again, 1 mark. Correct. However, the subsequent event has identified that the financial statement, but prior to the auditor's report, providing evidence in existing at the reporting period. Auditor should convey to the management that necessary amount should be written off, which is irrecoverable from Camly due to its liquidation. Due to its liquidation, yeah.
So this particular point has been in my Kaplan exam kit
Yeah, exactly. So
question.
the increase in receivable period relates to the slow-moving invoices by Camly and a major customer. The financial control is confident that the payment will be made.
Because the sir in my like this question in my
Correct.
book, it says that like Kami company is going into liquidation. So and the finance controller of that particular company says that that amount from Kami company will be recoverable.
Correct.
So
No,
I
but
wrote
on
that
what
part.
basis it is recoverable? And you can also
So
check the
I'm questioning the finance controller assertion that on what basis he said that.
correct. You should also write one more point, which is like after you check the receivable recoverable statements from Kamli Limited or check the bank statements post year end to see if this amount have been received or not. See if Kami Limited has after year end till they issue the final report, if they have paid some money back, right, then it is recoverable. Correct.
Yes,
If they
sir.
have not paid any money, then it is not recoverable. Correct.
Yes, sir.
So you could have mentioned that point also. So I would put it in convey that manager should recover, which is irrecoverable. Correct. Management should assess the inventory which is specifically prepared for Kami Limited and can be sold to the other customers or not. I didn't quite understand this particular part because here they are talking about the receivables. Only those receivables will be there only if you have sold the items, right? Further orders. You can say what is a further orders. You're trying to say that? Are you
The
referring to
particular
are
referring
you
to further
referring
or
to
that the
further
particular
orders?
inventory will then how अगर ऐसा नहीं होगा तो how will like that company that treat the particular raw material which is
Correct.
made for Kami company.
Yeah. So basically, let's say, for example, if Kami company have not paid any debt, right? There are two cases. Let's say, for example, you have already sold to, I've sold goods to you. You have not paid anything. Now, if you order, will I sell it to you again? Not
Yes, sir.
necessarily, right? I will ask you to clear your dues, right? Only then I will sell it to you. That's what I'm going to tell you, correct? So you can check whether, Kami Limited has any outstanding orders which are fulfilled or not to be fulfilled, etc. Because if the company is, if the finance control is saying that this is recoverable, there could be a risk that, additional orders done by Kami, they are still trying to fulfill. And further, Kami gave an order before going into liquidation. And what you rightly said is correct also. Kami gave an order before liquidation and that inventory have already manufactured, correct? And you have not done anything, correct? That's what you're trying to say.
Yes, sir. Yes, sir.
Yeah, but I would put it in this way that make it more clear, like, any
No,
orders.
I've written very crisp points. I have to
Yeah,
like write in more detail.
more in detail, you can maybe elaborate. I can give you a point for this then. I would give you a point for this. So total, I would put it as 6 marks. I think this one you have done better, 1, 2, 3, 4 marks, which is out of 6. And the one versus 5. So I'd still, I think you are scoring good, right? But I would say that, pick out pointers from here also. You understand? Because these are all relevant pointers in relation to the audit. Correct.
Yes, sir.
Inventory counting, trade receivable confirmation. Just because that is there, you cannot say this, and they have not mentioned this. So I would put it that, if I am a brutal guy, like if I'm a brutal examiner, he might not give you marks for writing all this. He might
The
give you marks
last
only for
one.
three marks also. So
Yes, sir.
I will also try to do that in this way. I'll just try to delete this mark, like
Yes, sir. Go
three
for
marks.
it.
Yeah, 3 marks per here, right? You understand?
Sir,
He might give.
when I pass my like CA inter exams,
Yeah.
and I file for no, like I file for like copies for my copies,
Hmm.
for especially for audit and SM,
Hmm.
strategic management and audit. And
Hmm.
what I see that two papers,
Hmm.
two proper papers means one paper there is like two side, and literally four sides of my answer sheet is totally unchecked.
Okay.
And my marks were like I was passing that paper. I have to score like 40 out of 100, and I scored around 40 to 43.
Okay.
But if the examiner check those two papers, I can get exemption
Yeah.
in that particular exam. So I
That's
know what what brutal checking can be.
Yeah, yeah, yeah. I know, I know. See, that's what happens. But in ACCA, they cannot do that. Like, because, uh, see, ACCA tries to, they don't try to take away marks from you, but they don't try to give you marks for the pointers you written because you might not have relevant.
Yes, sir.
If you have written something and if it is relevant, they'll try to definitely give you marks.
Out
Uh,
of 12, I think this was 12 marks question.
12 marks question. I think you would have scored 1, 2, 3, 4, 4, 5, 6, 7 marks. Around 7 marks.
7 out of 12 is not bad.
Yeah. 7 out of 12 is not bad. But this is my way checking. I would still try to, if I'm giving you 7 marks, then think from your perspective that you have scored only 5 marks. Just imagine in that way. Right.
Yes,
The
sir.
reason why I've written this is because you have written pointers like, what they should be doing, correct? That's the reason why I gave you marks. Like, this point was correct. You have written about, even though you didn't write about the assertions, you did mention out completeness, you did mention out accuracy, you did mention out valuation over here.
So as the particulars are assertions are, I tried remembering those assertions,
That's
but
fine.
in while writing answers, I was not able to like particularly write about us like
That's okay.
completeness, accuracy.
That's fine.
I
But still,
usually mix them all.
yeah, that's fine. But it's fine. That's okay. But you still got it to an extent, right? That's what I would put it there this way. But question the numbers, right? Like, more be brutal to the client. Like, question the numbers. Like, mention the numbers from the scenario. That's what is gonna give you marks. That's how the
Yes, sir.
professional marks is what you're gonna get. You understand? You're gonna score more marks, not because writing the procedures, but writing the brutal numbers. Like, how did you arrive at how did you double your obsolete? You understand? How did you come to a conclusion of 3%? Or how did you come to a conclusion of 0.5 million? How did you come to a conclusion of 0.4 million? You understand?
Yes, sir.
Be brutal on that aspect, I'm trying to say. Sale of a machine requires an
The,
understanding.
the government grant portion was not
Yeah,
available in my
that's
like
okay.
this one. No?
Standard sale of machine to be recognized in the initial fair value and health.
The amount was also
Mm.
changed in my
2
the
million. The auditor requests the
2 million.
management
Yeah.
not necessary. If the management does not make the following, in case the auditor will issue a qualified opinion. Okay. The way you have written this is correct, but it's not matching to the question, so I cannot I
Yes, sir.
cannot
No
give you the
problem.
marks. But the way you have written or you have approached it is correct.
Okay, sir.
If the numbers was correct and if the situation was correct, you would have definitely got marks for this. You would have got close to around 70% of what the marks are. See, they try to not to give full marks, right? Definitely, you're not going to get, if it is 12 marks, you're not going to get 12 marks because that's something that's very difficult to achieve. But I have seen
It is
people.
like it is like what they check, how they check the copies. Like ACC examiners are not allowed to give full marks,
No,
or
no, 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 no,
tried,
no, 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 no,
they
no, no.
tried that
It's
students
not like
are.
that. It's very difficult to achieve that perfection, is what I've believed. But I saw that in one of the LinkedIn posts, someone did score very good marks in audit in AAA. I forgot, someone. I did see someone, score 100 percentage.
100% marks in AAA.
Yeah, not AAA, in one of the ACCA paper. In one of the ACCA paper, I did see someone, I don't know.
Leave, sir.
Yeah,
I'm not
someone,
gonna do it.
uh,
I'm not gonna able to do
no,
it.
but
I
no,
know.
don't think in that manner. Don't think in that manner. Just,
And that's the only truth. I think I can score like above 60 if I
yeah, that's okay.
do
You
well
can,
in exam day, but scoring 100 is a different league.
it's okay. You can just,
And
you
I
still
and
aim
I've
for it.
only and I've only prepared for like 2 months. And if I
Yes.
able to score like 70 odd years, above 60 plus and above 70, then again it's a good score for me.
Yeah. Just aim for it. Nothing wrong in aiming for it, right?
Yes, sir.
Nothing wrong in aiming for it. Nothing wrong in aiming for all this. It's very important you aim for it. What you whether it happens or not is not required, is not nothing to be worried of, but you need to aim for it.
Yes, sir.
Yeah.
So are we doing the next questions?
Let me just check. I don't think so. We might have the time. Shall I give that to you with an as an as homework? Can you try to do that?
Yes, sir, but you have to send me screenshot of that.
Yeah, I will send you the
Uh,
screenshot. Don't worry.
Answer send me another 2 3 questions, 25 marks question,
I will send you.
and can we do those questions tomorrow, like in
Sure,
fast track mode?
sure. We can do that. No worries. Okay, I'll do that to you. Okay.
Like by this way we can able to like solve nearly many of the portion of the exam kit. So
Absolutely. I
yes,
would
sir.
recommend you to do that, portions by yourself. The reason why I do less questions on revision kit is that I encourage students to do that, looking at the way that I have given approach to my syllabuses, right? Because I want students to come up with questions that, sir, I in revision kit, this is what I'm facing, this is what I'm, having the trouble. So
Okay,
that's
so
what I try to do.
so
Because,
so
when you,
you just send me like 3 4 questions,
I will do that. I'll
and
send you 4 to 5
know,
questions. Don't worry. I'll send you 4 to 5 questions. Try to do
and
that. There will be,
we'll discuss tomorrow at fast track mode.
absolutely. And there will be also mock. I will send you the mock as well. Don't worry about the mock.
So mock I'll be attempting on 25th.
That's okay. We'll send you the mock. You can attempt it when you're free.
Yes, sir. So
Okay.
by 25th, I am planning that if we are able to do like around 10 to 12 questions till 24th,
Yeah, sure.
another like
Definitely.
10 questions, then it would be a great
Yep. I'm
practice
just
for
gonna
me.
give you the question. Don't worry. Okay.